The following critical U.S. inflation report is due on Thursday. Traders and investors still hope it will show enough evidence of easing price pressures to convince the Federal Reserve to raise interest rates in December. Thursday is when the Consumer Price Index report for October will be released, and economists and traders expect it to show the first annual headline reading below 8% in the last 8 months. Even though there is still one more inflation report to look at after the October reading, Fed funds futures showed on Wednesday that there is a 57% chance that policymakers will slow down their series of significant rate hikes of 75 basis points and instead raise rates by a smaller amount of half a percentage point next month. The CPI report, which came out on Thursday, has a lot of data that the financial markets can use to make decisions. On the one hand, economists polled by the Wall Street Journal think October's CPI will show another strong monthly reading, this time 0.6% compared to 0.4% in September. The monthly core estimate, which leaves out food and energy to give a less volatile look at inflation, is expected to drop from 0.6% to 0.5%. The annual headline rate, which catches people's attention and affects what people expect, is also expected to go down, from 8.2% in September to 7.9% in October. Since the data keeps surprising us, Brian Jacobson, a senior investment strategist at Allspring Global Investments in Charlotte, North Carolina, which manages $463 billion, said, "We are hoping for the best, but ready for the worst. We think that the prices of durable goods will stay the same or even go down, but we need to figure out what to expect from the data on services. I don't put much stock in the predictions because so many different things could happen." Before the CPI report came out on Thursday, Allspring considered investing in REITs and consumer staples stocks instead of the more popular S&P 500 index SPX, plus 0.92%. Allspring has also put more money into US stocks than European stocks. Fixes traders think that October's headline annual CPI rate will be 7.9%, which is the same as what economists think will happen. Fixing traders think the yearly headline rate will drop to almost 7.4% and then 7.1% in November and December. By July, it will drop even more, to around 3%. During the past year, fixings traders have primarily been concerned with the possibility that inflation will rise faster than expected. Gang Hu, a tips trader at the New York hedge fund Winshaw Capital Partners, said, "Everyone is once again looking for a pivot in CPI. The market is expecting a change this time, especially in the report's housing and healthcare parts. The market is also trying to figure out if the economy will eventually slow down, regardless of the level of the CPI, which would solve the inflation problem." Due to the Fed's post-meeting guidance last week, which gave investors more information about where interest rates are likely to go, Hu said that the financial markets might be entering a quieter time than earlier this year. This is unless Thursday's CPI shows a big surprise to the upside or the downside that makes stocks and bonds both fall or rise simultaneously. He said that if October's inflation data matches what was expected, weaker than expected corporate profits or a possible spillover from the recent crypto turmoil are more likely to affect markets in the future. A trader for Winshaw Capital says that Thursday's data will not likely make a big difference in the market's expectations for the Fed's Fed funds rate target in the first half of next year, which are mostly between 5% and 5.25%. So, he says, the 10-year and 30-year Treasury yields should stay within the ranges they have been in recently. After going up for 3 days in a row, US stocks DJIA, plus 0.10%, SPX, plus 0.92%, were down a lot by the end of Wednesday. The 10-year rate TMUBMUSD10Y, which started the day at 3.819% and ended the day at 4.15%, was all over the place in New York. If you enjoyed this video, don't forget to subscribe to our channel.